We are looking live at a daily chart of the Nasdaq. Today is Saturday, August 10th. Welcome to my weekly review. Last week was an important week on the stock market, and especially in the Nasdaq here, as it traded down to its 200 simple moving average on the Monday gap lower. It traded down to the 200, then rallied back the rest of the week. Thursday was a real strong day, but the gap lower, there was a gap here on last week. The low was a 17,051 and the high was 16,920. So there's a gap there to fill. Monday it opened up lower with the excuse of a Japan carry trade or whatever. You could use any excuse you want. This looks like textbook trading to me. Just pull back to the 200, the longer term moving average, which is rising. We're in a longer term uptrend. Short term, we had a 16% correction from peak to trough here, from the high of July 11 of 18,671. You can see this high here on this date here. Yeah, 18,671 to the low on Monday of 15,000. Okay, 708. So you could do the math there on the correction. Long-term of fund managers love a correction like 16%. They're licking their chops for something like this. It doesn't happen very often. We had a correction here, a 4-week correction. If I go to the weekly chart here, you can see it a little better. This correction here didn't pull back to the 200, the March to April one, and then we had a nice rally. And then this one pulled back to the 200 and rallied back up. If I go to like a 5-minute chart, you can see the gap lower. 10-minute chart. Did I say 5-minute? 10-minute chart. You can see the gap lower here on Monday where it just traded down to 15,708 and just rallied the rest of the week. Yeah, there's fits and starts and him and haw, but it rallied higher the rest of the week and had that, got to go to the weekly chart, Marty. The weekly hammer candle there where it closed near the highs for the week. So 4 weeks of selling, volume increasing. I believe that's capitulation selling. And now we rally back up. And if I go to the daily chart, I believe that gap gets filled there at 17,051. It closed at 16,745. So it was just flat on the week, even though had that disastrous Monday, but it was only down 30 points or 0.18% for the week. So the Nasdaq to me is recovering. It's setting up for a rally to at least fill this gap here. It's still below its it's still below its 50, still below its 21, and it met resistance at the 10. So it's got to work through that in order to fill that gap there. If I was a betting man, I would say it fills that gap and probably rallies through these moving averages. That would be my guess. If you just take a look back, take a step back, as Phil and Bob Weir would say, take a step back. We rallied into earnings season. As soon as earnings season get here, the earnings were good. And what did it do? It just sold off in the news. Buy the rumor, sell the news. But the earnings weren't bad, with the exception of a few companies that got hammered. But the earnings were pretty good. Some of the CEOs are cautious about the U.S. consumer going forward, blah, blah, blah. They've been saying that for years, and they just do that so they can give cautious guidance and then crush the guidance. I'll get to that in a minute. But anyway, this pullback on Monday, I'm going to go to the SPY now, SPY Daily. That has a gap here as well. And this gap down here on Monday set up some really nice prices for some stocks, quality stocks at lower prices. And that's what, the hedge fund managers or just portfolio managers look forward to, a pullback. That's an actionable pullback. So that 16% correction in the Nasdaq is something that I think they run to and not from. MNDY, same thing. They all look the same. Pull back to the 200. It's below the 50, meeting resistance at the 10, but this one has a gap to fill there at the 549. It closed at 536. The IWM, similar profile, traded down to the 200. Now it's below its 50, but this one has a gap to fill at 215. It closed at 206. And the Dow Jones Industrial Average doing a little better. Filled this gap here, but has one more at 40,098. So that's what I'm looking forward to next week. I believe the selling is pretty much done with. You can never be too sure in the market, but there's a lot of stocks to trade, and I'm fairly confident we're going to get some tailwinds from the the indexes now that they've had this sharp correction. I mentioned some quality stocks, at lower prices. And if I go to that 10-minute chart that I showed you on the Nasdaq, if you were quick to the draw here, you could have gotten NVIDIA there at $90.69, rallied back up there on Monday pretty quickly, and then closed the week, at 104.75. So you bought it at 90.91. That's a nice trade. Amazon was another one that I was looking at. Quality stock that opened lower on Monday. Yeah, if you got it at 151, my buddy got it at 154. Good for him. I did not, but closed the week at 166, nearly 167 for Amazon. And that was true with all of the the mega cap tech stocks. So I'm not going to go through all those. Somebody asked me to look at the earnings. This is a week in review, so I'm going to look back at last week's earnings reports. I was asked to do this, so I'm going to comply and just go through some earnings reports of stocks. And this is just going to be random. I'm not going to go day by day, just random stocks that I wrote down that I kind of like and just caught my attention. This is ADMA I listened to their conference calls, the last few conference calls, and these guys are obviously going to beat and race for a couple more quarters here. This current quarter, they had a one-time accrual, a benefit, so they won't have that next quarter, but they're still growing, 40, 50%. So to me, broke out on Friday, broke out 31%. But if you look at the monthly chart, and this is, why I look at different time frames, 5-minute, 10-minute, monthly, daily, weekly. This just broke out last week from this 14 and change area. So that's the beginning of a breakout of, I guess you would call that a big IPO base, right? Just broke out of that box, right? So this is one that I'm definitely interested in, even though, I was up 30% last week. I get it, but to me, this one's just breaking out here, the $14 range, and it broke out nicely, and it closed at 15.96. So with their earnings and sales profile, I really like this stock. Those double-digit blue numbers appeal to me, triple-digit in some cases. I like that stock. So they had a solid earnings report, and more importantly, the response was definitely positive. ELF reported on Thursday afternoon, I believe, and the CEO made a mistake. And these guys just sandbag too much. They really cautious guidance. They have had 22 quarters in a row of 20% growth, sales growth. So, I don't know. They just like to be cautious. He was one of the CEOs that was extremely cautious about the consumer going forward, and he got punished for it. This thing traded down to its 200, even closed below it. The earnings growth was not a Zippo, $1.10 last year and $1.10 this year. The sales growth was 50%, but it's slowing, and this is a problem. You go from 85 to 71 to 50. What's it going to be next quarter? 30, 25? I mean, we saw that with the Celsius, how the slowing growth is death for a growth stock. So I'd be very careful with this one. Obviously, below the 50, below the 200, it's in trouble. It's not uncommon for a stock to trade down to its 200 though, and you can see it's done it before and rallied back through. So here we are again, below the 200. So maybe some people think it's a buy and growth will continue. Maybe not. So ELF is in the timeout box, so there's no way I would touch this one. And the CEO's got to be a little more aggressive with his guidance. Just way too conservative there on the guide. I get it. He wants to be able to crush earnings, and they crushed all estimates. They crushed earnings and sales estimates, but the stock, only price pays, and the price is going lower. So it's adios muchachos for me. Sweet Greens, this is it was an okay earnings report. They had 46% earnings growth, 21% sales growth, margins, coming in still. But, we just, want to talk about the stock price, and the stock is appreciating. It broke above, the downtrending line here. So there's that, up a 33% move on Friday. So that's what you want to see. If you own the stock, you're going yippee-ki-yay. Still has, work to do. in my opinion, it needs to, kind of form a handle before, a longer term move for sweet greens. Restaurant stocks they were strong for a while, then they got hammered, like a lot of stocks during the correction. When the Nasdaq corrects 16%, you can expect your growth stocks to correct 2 to 3 times that. So anyway, that is sweet greens. SMCI is adios muchachos in a stage 4 decline here. If I go to the weekly or maybe even the monthly, you can see the stage 1 base, the stage 2 ascent, the stage 3 can't appreciate anymore, and now the stage 4 decline. So this is radioactive. You cannot touch this one, and don't try to catch a falling knife. It's game over for SMCI, even though they did they did deliver triple digit sales growth and 78% earnings growth. But stocks top when the fundamentals look the best, and the chart, I buy on technicals and fundamentals and sell on technicals. This is a sell a long time ago. So it's just, kind of confirming what we already knew. Celsius, talk about a stage 4 decline. This one, I think I go to the weekly on this one. Nope, the monthly. Okay, so you can see, the stage 1 base, stage 2 ascent, and then stage 3, I can't go, can't make any further progress, and then stage 4 decline. This one is radioactive, much like SMCI. So you think, oh my gosh, I could buy it at 38. Nope, don't even think about it. It's below all these moving averages, is trending lower. Don't try to catch the falling knife. Don't be a hero. Yeah, I know the fundamentals look great back here. I mentioned this with ELF, these slowing sales growth. When you go from 95 to 37 to 23, what's it going to be next? 10%. So it topped when its fundamentals look the best. And now it's on this, steep and steady decline. I know some people say, oh, it's a double top. Pretty much every cup with handle is a double top. So I wouldn't worry too much about that. But that one's going lower. All right. Some of the energy names reported. Constellation, this one got hammered, with the index. The index, like I said, it was down 16%. So you got to expect these stocks to take a hit too. Constellation reported pretty tepid growth here, just consolidating in a base. But the build out of AI is going to be long term. They're going to be winners in that. So that's why I continue to watch it. But I'll just let it form a base here and let it set up. It's below its 50. This is Vistra, same thing, same profile. They reported, 21% sales growth, but I don't like these red numbers down below. So they're kind of in timeout for another quarter. Uber reported, a lot of people like Uber. They reported a strong quarter. This one sold off, corrected before the index did. Now it's just consolidating in a base. And then on that Monday, man, you could have got this stock, you'd have to buy it prior to earnings, which, was really risky. If you want to manage risk, don't buy stocks prior to their earnings reports. Yeah, $54 on Monday, closed at 68. So there was just a lot of bargains there on Monday. Uber, pretty strong report. The next one is Fortinet. This is a company that's really well managed. They had a couple of bad quarters. If you look at the weekly, you could see these gaps lower here on quarterly reports. These two are bad. Yeah, down 10% on that one that week, and down on this week when they reported 26%. So yeah, but had a nice week last week, up 23%. Nice quarter for the folks at Fortinet. So congratulations. 50% earnings growth, 11% sales growth. So, and you got to like a gap higher after earnings. This one gapped 25% and moved not to be ignored, Dan. And Fortinet is definitely on my watch list now. Let me see. AVPT. Somebody asked me to take a look at this one. A stock that I'm not familiar with. Computer software database, 1.8 billion market cap. 20% sales growth, not a zilch EPS growth. Pulled back to the 50 and now, traded and closed just a tick above it. Smaller stock, like I said. Earnings line flattening out, 9% below its high. No great shakes. I think you could do better. and it's still kind of in this little IPO base from 2020. So Av Point, I think you could do better. Looks okay though. I mean, it's above its 50, which is saying something after this recent sell-off. Hood, they reported pretty strong quarter, 40% sales growth, which is, consistent. They went 24, 40, and then 40 again. Triple digit earnings growth. So Hood is doing, what it's supposed to do. It traded down to its 200, just like the index, and now rallied back above. So we're seeing a lot of that. CPRX is a biotech stock, and they reported strong sales, 23% sales growth, and nice move once again. On Monday, this thing pulled back to 15.34 and ran up to $19. So that's a nice move for Catalyst Pharmaceuticals. 23% sales growth is not bad. Kind of choppy sales here, though. They went from 82 to 15 to 23. So not one that I really follow closely. I have other biotech stocks that I like. Shark Ninja. Somebody liked this earnings report. 31% sales growth, 51% earnings growth. How do you do? A nice 17% move on Thursday, followed through on Friday with a nice nearly 3% gain. So let's take a look at the weekly for Shark Ninja. There's that little base, and it just rallied straight from the bottom here. So you can see this earnings line heading due north, the relative strength line due north. It rallied through its moving averages. So that's kind of a telltale sign there of strength rally, when their RS line rallies through these moving averages. Trades near highs. That deserves a blue dot. Anyway, it's one that I like. It's got a buy point at 80, essentially $81. So maybe it'll kind of, allow the moving average of 10 to catch up and give you an opportunity. ASPN, this is a smaller stock, 1.6 billion market cap, but they continue to deliver strong triple-digit sales and earnings growth. Their margins are increasing, 22, 35, 37. It's a chemical specialty, in the automotive space. Earnings line heading due north like we like. And this one looks really strong. You can see those double-digit blue numbers, which is something we like, even triple-digit. Yeah, 15 points last week. 15%. Very nice move. Still, below the 50. The 50 is curling lower. The shorter-term moving averages are curling lower. So it's got some work to do. But, all the company can do is deliver strong numbers, and that's what they did. AXON, somebody asked me to take a look at this. This stock that I like. Obviously breakout here. Following the earnings report, 8.7, it was up 18%. Thank you very much. We'll take that all day long. Let's see what the weekly chart looks like. Yeah, clean breakout from the base there. Very nice. Closing range 92% of the weekly range, up 25%. So we'll take that all day long. The two drug stocks, the weight loss drug stocks, the two heavyweights reported last week, and Novo was definitely the weaker of the two. The stock is the weaker of the two, as it's still below its 50. Still, it had, the sell-off. This is Monday here, to 126, and then it reported earnings on Wednesday morning, and it traded down to 118. And that was below its 200. In the last 2 days, it's rallied back up to 133. So that is a nice move. Yeah, it's up nearly 5% last week. Looks like a classic technical bounce off the 200 here, or I should say the 40-week line. And yeah, if you're a manager and you can get this thing at 118, I'd rather buy it at 118 than 148. How about that? 23% sales growth, which is not bad. The CEO is in a tough spot, as he cannot really, because the Sanders committee is Bernie Sanders, Senator Sanders is after these guys for higher prices. So they've lowered their prices a couple of times, and they want the Catalent deal done, and they're going to have to play ball with this administration and the FTC to get the Catalent deal approved. So, they'll probably, grease some palms and lower prices. But longer term, if they get that manufacturing plant in Belgium, Italy, and Indiana, I think it's Indiana. And they're building one in North Carolina. They're playing the long game of a manufacturing, but I don't think they're Wegovy and Ozempic. I think they're fine. The demand is insatiable, as we heard from the Lilly company. This is a shakeout plus 10, 10% move from this bottom after they reported earnings on Thursday. It gapped higher up to 877, that then pulled back and closed at 38% of its daily range. And so I thought, man, it's getting rejected here at its 50. I thought it had more juice in it and wanted to go higher. And there were some buyers out there. And on Friday, it certainly did. It was up another, 5.5%. So for the week, it was up more than 10%. And there's your pullback to your 40-week and a classic move after 3 weeks of correcting. This one traded higher, closed at 90% of its weekly range. To me, I still think Lilly's a buy here as it, powered the RS line powers through its moving averages, and it's the shakeout plus 10% rule applies here. And I think that's still a buy. It has a gap to fill, like Novo, these things gap down, has a gap to fill there at 938. So I like this one better than Novo, obviously, because it's above its 50. And Novo is not. And you can just see the sales and earnings growth here. If I zoom in, you're going from 28, 26, now 36% sales growth, and the earnings growth, 19, 59, 86. That's really strong earnings from Eli Lilly. TGTX is another one that this is a biotech stock that I like. They have best in show multiple sclerosis drug. I got to look at the weekly here. Yeah, it was up nearly 8% last week. You can see this cup pattern. To me, that's 3-week shakeout. That's a handle pattern, and now closes 59% of its daily range. This still has work to do, but you could see this earnings line heading due north, and it was up on volume on the weekly chart. This looks really good to me. I think it's actionable here. I know there's a lot of shorts in it, but it traded below the 50, then rallied above it, and then it's got this little, wedge type action here, on this pretty steep wedge there on the daily time frame. I kind of like the weekly chart on this one. It's just going to take time, is I think maybe even another quarter, quarterly earnings report. But come on, man, 357% sales growth and triple digit. It's profitable now. Yeah, it's got a 3 billion market cap with, what did the guy say, 300 million in sales. So it's trading 10 times sales. So it's not a cheap stock. But I think going forward, Wall Street's all about looking forward. I think going forward, they're going to have to, they're going to do 500, 600, even a billion run rate yearly in sales for their BioNV. Palantir was another one that reported earnings last week, strong earnings. Definitely a gift here as it sold off. It was well below its 50 here. It traded down to $21, closed at 30. So that's a nice gain, right? Wow, you're talking about a 50% gain essentially for Palantir if you caught the low, but it was up 21% last week. So thank you very much, Palantir. Congrats to the longs. Halo, this is Halozyme Therapeutics. This one didn't even pull back to its 50 as the market corrected. This one's pretty darn strong. It's still, kind of, broke out of this stage 1 base and trading higher, but man, this one's, I think, has more runway. You could see the earnings line heading, gradually north. It was up 2% last week, while the Nasdaq was essentially flat. So I still like this one, and this one's showing strength. Anyway, I got to move on. Airbnb, do not like this business model. I think they're in trouble. Reported, negative earnings growth. So I would just stay away from this one. Radioactive, well below all its moving averages. So it's adios muchachos for Airbnb. Bros is a different type of story. They had the growth, 30% sales growth, 46% earnings growth, nothing to sneeze at, but the thing sold off. Management has 25% ownership of the stock here. So that's something to be careful of. If I go to the weekly chart, you can see management here, ownership 25%, so they can dump shares whenever they like, which is a little unnerving. But this one sold off, 5 weeks in a row? That looks like capitulation selling to me. So if you want to buy bros, I'd rather buy it at 29 than 43. So I think it's on sale right now. Very strong sales and earnings growth. And the last one I'm going to cover is AppLovin, another strong quarter for these guys. 44% sales growth, triple digit earnings growth. What more can you ask for? This one, obviously, textbook action pulled back to its $260 on that Monday, rallied up, but it's hard to buy stocks right before their earnings because we've seen so many get crushed. And you can see this is just, still kind of in its IPO base here, and it pulled back to the 40-week line. I think this has a longer runway as well. All right, that's it for me, except for I have a couple more things. One, we have earnings reports next week. A couple companies that I'm interested in. Monday, reports on Monday, which is appropriate. Last time I think they reported on Thursday. And so this is a stock that I'm definitely interested in, a software name with strong sales and earnings growth. ONON, a retail group, the Crocs and Deckers have been kind of in a correction mode, or consolidating in bases, and that's what On Holdings has done. I'm pretty sure they're going to deliver a strong quarter, but we're going to have to wait and see. Home Depot is going to report, just a bellwether for the retail group, and then SE is going to report also on the 13th. A couple others that have been bellwethers over the years. Cisco Systems, this has got 183 billion market cap. They're going to report on the 14th. And Walmart, we know that's a large retailer. So the retailers are going to have, Home Depot and Walmart, and it's going to have some big names, and then retail On Holdings, and then software. We have and networking is Cisco, and then Monday, and I think one of the semiconductors that are going to report is Applied Materials, which sold off and below the 200. Anyway, that's it for me. Thank you for watching. Except for in honor of the great Steve Jobs, I have one more thing. I got a question about stop losses, and in this market, people are still pretty hesitant to get in, and they've suffered some losses during the correction. And Spotify's held up pretty well. You can see here it undercut its 50 on that the Monday, where we got the yen carry trade, where the Nasdaq gapped down 1,100 points. So you could have had Spotify at 300 if you're quick to the draw, and it just rallied up all week. But let's just say, because I had a question about stop losses. Let's just say you bought this stock on Thursday, which was a stellar day, as it ran right through its buy point there of 331.08. I can go to like a 10-minute chart here, and there you can see on Thursday this rally here, and as it rallied through the 331 right in here. So let's just say you bought it, okay, and it rallied back up on Thursday, closed higher, and then it rallied on Friday, and you can see this stock here making higher lows. So on Monday, made that low of 300, and then a low on Tuesday of 320.38, a low on Wednesday of 323.16, a low on Thursday of 324.36, and the Friday low is 333.67. So let's just say you bought it at that buy point of 331.08. Now you got, $8 gain in it because it closed at 339.90, a little more than an $8 gain. So where would you put your stop loss? I would put it just a tick below the Friday low. Because sometimes, they get cute, and they, do a little peekaboo and make a lower low and then rally back up. So the Friday low was 333.67. So if you put the stop at, stays 333.50, you're guaranteeing yourself a win because you bought it at 331.08 here. And you want to win, but obviously you want more profits, but you don't want to see a stock making lower lows. So you want to protect your gains. You want to win. Obviously, you want it to trade higher. You want it to open up and trade higher on Monday, so you can raise your stop losses. But you want to protect your gains. Stop loss will be 333.50, and you guarantee a win. And if it pulls back to the 10, you can always buy it back. So that's the advantage we have as retail people. We can just get in and out of these stocks, whereas institutions, we're trying to establish longer term positions, and they can't trade in and out as quickly as we can. So the 331.08 is that buy point. You got $8 gain on it. I did buy this one last week. I am holding it, but that's just how I would play it. That's just me. Good luck if you own Spotify. And thank you for watching at mcstockcharts.com. We never give up. Have a great weekend, everybody.